This is the IRS Problem Solver podcast. I'm David J. Griggs, CPA. If you got tax debt, payroll tax issues, or the IRS is coming after you, you're not alone. Each week I share real strategies to stop collections, protect your business, and take control of your tax problems, legally and effectively. Let's dive in. Today we're going to bust some myths that I hear all the time from business owners about payroll taxes. Here's the thing. Most myths start with a little truth, and that's why people fall for them. But when it comes to the IRS, believing the wrong thing could cost you your business, your bank account, and even your personal assets. So for the next 10 minutes or so, I'll walk you through 3 of the most dangerous myths about payroll taxes and what the truth actually is. All right. Number 1, this is the most common one. I'll just cover payroll now, and whenever the business picks back up, I'll catch up on taxes. Sounds logical, right? But here's the reality. The IRS stacks penalties and interest on unpaid payroll taxes faster than almost any other debt. Even if you pay the balance 6 months later, the penalties means your debt can double. Here's an example. A client of mine delayed about $50,000 in payroll taxes for a year. By the time they came to me, they owed $90,000. That's not bad luck. That's just how the system works. The truth is, there's no catching up. The moment you decide not to remit payroll taxes, you're already behind, and the IRS knows it. There's actually a word for this. It's called pyramiding, and they hate it. Do not do it. Number 2, a lot of owners think, hey, I run an LLC or a corporation, so this debt sinks with the business. Not true, unfortunately. Payroll taxes fall under what's called the trust fund recovery penalty. If the IRS decides you're a responsible person, meaning you had control over the finances, they can tag you personally for the debt. That means they can come after your house, your savings, and your future income. And here's the kicker. It's not just the business owners. Bookkeepers, CFOs, even managers who signed checks have been held liable in some cases. If your name's on the decision-making list, the IRS can put you on the hook. So it isn't just a business problem. It's a personal problem if you don't deal with it head on. Moving on to number 3. Another big misconception is the IRS is slow. People think they'll get notice after notice and have months or years to deal with it. That can be true in some circumstances, but today, it's not really happening anymore, especially with payroll taxes. Once a payroll tax is assigned to a revenue officer, they move almost immediately. We're talking weeks. Bank levies, wage garnishments, even contacting your clients, that can all happen with just a single signature. And the IRS has gotten even more aggressive lately. They're using more automation, more AI, more data tracking to flag payroll tax cases faster. By the time you get that scary certified letter, they've already got your case queued up for enforcement. So no, you don't have years to figure this out. You got weeks, sometimes days, depending on how fast you get that mail. So we debunked the myths. What should you actually do? Acknowledge it early. That's number 1. The sooner you deal with it, the cheaper it is. 2, pull your transcripts. Don't guess at what you owe. You'll figure out exactly what the IRS is saying they have on you. You especially don't want to be surprised if you do a bunch of work to get into a resolution, come to find out you're missing a payroll tax return or something. It's not worth it. Pull your transcripts. 3, build a strategy, whether that's an installment agreement, penalty relief, or in very rare cases, a settlement. They don't usually like to accept those on payroll taxes. Regardless, you need a tailored plan. And that's exactly what we do day in, day out. We start every case with a transcript investigation. And that's the blueprint for your entire resolution. So let's recap. Myth number 1, I can catch up later. No, it's false. Penalties will eat you alive. 2, it's just a business problem. No, you could be personally liable, even if you don't own the business. And 3, the IRS won't move fast. False. Maybe it used to be true, but it's not anymore. They move a lot faster than you think, especially once that revenue officer gets it. The truth is, payroll taxes are one of the IRS's biggest priorities, but with the right strategy, you can stop the damage and protect your business. I'm David J. Griggs, CPA, and this has been the IRS Problem Solver. Thanks for listening, and remember, don't let these myths run your business into the ground.